All right, so are you thinking about maybe buying a house, or are you perfectly content renting for for now? Either way, this deep dive is going to be super helpful because we're going to help you decide what is the best option for you.
Absolutely. And for this deep dive, we are turning to J.D. Roth and his audiobook, Your Money, The Missing Manual.
This audiobook is jam-packed with personal finance advice, and today we're going to really extract the best pieces to help you make a really informed decision about renting versus buying.
It's funny. We always hear people say that renting is just throwing your money away.
Right.
But Roth actually quotes a Yale economist who argues that that might not always be true.
Oh, interesting.
Yeah, there are a lot more factors that we need to consider.
It's not so black and white.
Yeah, right.
Okay, well then I guess let's jump right in and do a classic pros and cons list.
Yeah.
When we're talking about owning a home, what are some of the biggest advantages according to the audiobook?
Well, Roth points to stability as a big advantage of owning a home. Your monthly payments are generally predictable. They're stable,
Hmm.
unlike rent, which can fluctuate.
Oh, right. Yeah, that makes sense.
And then, of course, there's the idea of building equity.
Yeah, you're building wealth.
Right, as you pay down your mortgage, you own more and more of your home. Yeah. And plus, if the value of your home goes up, then that's like a nice bonus.
Yeah, that's a big one.
Yeah.
And I know a lot of people talk about the freedom that comes with owning a home.
Right.
You can finally paint those walls that crazy color that you've always wanted.
Exactly.
And renovate the kitchen, put in a garden,
Yeah.
personalize it.
It's yours. You can do whatever you want with it.
Exactly.
You can really put down roots and make it your own.
Yeah, totally. But I mean, renting has its advantages too.
Of course.
What about flexibility? You're not tied down to one spot, so if a new job opportunity comes up or, even just chasing lower rent, you can move.
Yeah, exactly. You can pick up and go whenever you want. And let's not forget about the reduced responsibility of renting. You don't have to worry about fixing a leaky roofs or, if an appliance breaks down, that's not your problem.
Right.
Roth also points out that renting can sometimes be cheaper than owning, especially if you factor in things like property taxes and, all those unexpected bills that pop up when you're a homeowner.
Right. And it's not always just about the money.
Right.
He mentions this couple, Sierra and Martin, who were actually happier after they downsized from their dream home.
Wow.
It's interesting, sometimes less space and fewer responsibilities can actually be a good thing.
Yeah.
It can give you more freedom and flexibility.
Absolutely. It's all about finding what fits your lifestyle and your financial goals.
Right.
Sometimes we get so caught up in the, American dream of owning a home that we forget to ask ourselves, is this really what I want?
Does this fit with my values?
Exactly.
Okay, so we've seen owning versus renting. Each has its own pros and cons. But let's say you are leaning towards buying a home. How do you even know how much house you can actually afford?
Well, that's where things get really interesting. Roth introduces this concept called the debt-to-income ratio,
Okay.
or DTI for short. And that compares your monthly debt payments to your gross income.
So if you have a high DTI, that means you have more debt compared to how much money you make.
Exactly. And here's a catch, banks. Banks will often approve loans based on DTIs that are higher than what's actually comfortable or healthy for you.
Oh, wow.
So they might say a 33% front-end DTI is okay, meaning 33% of your income before taxes goes towards housing costs.
So they're basically willing to lend you more money than you can probably realistically handle.
Right. So it's super important to do your own calculations and figure out what DTI gives you some breathing room in your budget.
Yeah, for other expenses and, saving and all that.
Exactly. You need to be able to live your life.
Okay, so that's a good tip.
Yeah.
What about a down payment? I know that's a huge hurdle for a lot of first-time home buyers.
Right.
Is that 20% down payment thing really necessary?
Well, Roth is a huge advocate for putting down at least 20% if you can. And it's not just about avoiding private mortgage insurance or PMI.
Oh, I didn't know that there was more to it.
Yeah, putting down 20% also often gets you a better interest rate on your mortgage,
Oh, wow.
which will save you money over the long term.
Mm.
And it also reduces your risk of being underwater on your mortgage, which means you owe more on your house than it's actually worth.
Oh, that makes sense. Okay, so there are a lot of benefits that come with that 20%, but what if you can't quite swing it?
Well, there are some options like piggyback loans, which basically involve taking out a second loan to cover part of the down payment.
Okay.
But it's important to, understand all the terms and risks before you go down that path.
Right, of course. So let's say you've done all your calculations, figured out your DTI. You're feeling really good about buying a home.
Uh,
What other advice does Roth have?
well, he suggests doing like a little trial run before you even start looking at houses.
Oh, that's interesting.
It's a great way to see if you're really ready for the commitment of owning a home.
Okay. I'm intrigued. How does that work?
It's super simple but effective.
Yeah.
So for a couple of months, you pretend that you already have a mortgage. Calculate what your mortgage payment would be and compare that to what you're currently paying for rent. And then take that difference and put it into a savings account each month.
Oh, so you're basically pretending you have a mortgage.
Yeah.
Okay.
And if you're finding it really hard to make those pretend payments, or if you have to keep dipping into your savings, then that's a pretty good sign that maybe you're not quite ready yet.
Right. It's a reality check.
Yeah,
I
exactly.
like that. All right. So what happens if you pass the trial run? Is it time to hit those open houses?
Almost. Roth says that before you start looking, you need to make a list of your wants versus your needs in a home.
Oh, yeah. I can see how that's important. It's so easy to get caught up in all the excitement of house hunting.
Yeah, and fall in love with a house that has a pool and a hot tub when maybe you don't actually need those things.
Right. And then end up with a house that you can't really afford.
Exactly. Roth even mentions this really fascinating statistic that house sizes have been increasing for decades, even though the average family size has shrunk.
It's true. We do tend to buy more space than we need.
Right, remember Sierra and Martin?
Yeah.
They thought they wanted that big house, but it turned out to be more of a burden than anything else.
Totally. So yeah, making that wants versus needs list is a really good way to keep yourself grounded during what can be a really emotional process.
For sure.
Okay, so you've done your due diligence, you're financially prepared, you're ready to dive into the world of mortgages.
Right.
What are some of the key things we should look for when we're comparing all the different options?
Well, first things first, Roth says you got to find a good interest rate.
Yeah.
Even a small difference in interest can save you thousands of dollars over the life of your loan.
Oh, for sure.
So shop around and get quotes from a few different lenders.
Right.
He also emphasizes the importance of understanding what's called the annual percentage rate.
That's the APR.
Yes, the APR. And that includes all the fees and charges, not just the interest rate.
Right. So it's a more accurate picture of the total cost.
Exactly.
Yeah.
And here's a tip that's not really financial, but I think it's just as important. Trust your gut.
Okay.
If a lender or a broker give you a bad feeling, walk away.
Yeah, you want to feel comfortable with the people who are handling this huge financial transaction.
Absolutely. And don't be afraid to ask questions and compare offers and negotiate for the best possible terms.
It's your money. You have to advocate for yourself.
Exactly.
Okay. So we've covered a lot of ground here.
We have.
Talking about the pros and cons of renting versus buying, figuring out how much house you can afford, even dipping our toes into the world of mortgages. But I know there's more to the story, right?
Oh, yeah. There's a lot more. We've talked about the upfront costs. But what about those ongoing expenses that come with owning a home? You know those little things that you have to budget for once you're a homeowner?
Okay. Yeah. Like what?
So next we'll uncover some of those hidden costs of homeownership, like maintenance and repairs, and we'll also explore that mysterious thing called home equity.
Sounds good. Let's do it. All right. So you've done it. You've bought a home. You're officially a homeowner. Congratulations. But as J.D. Roth reminds us, your money. Missing manual. The spending doesn't stop there.
That's so true. Owning a home is a little bit like getting a new pet.
Oh,
It needs your attention, it needs care, and all of that translates into ongoing expenses.
okay. I see where you're going with this.
Roth actually uses a helpful analogy to drive this point home.
Okay.
He compares owning a home to owning a car.
Oh, okay. So we all know cars need regular maintenance, oil changes, tire rotations.
Yeah, exactly. And just like ignoring those maintenance tasks can lead to like bigger, more expensive problems down the road.
Right.
The same goes for your house.
That makes sense. So how do we stay on top of all that?
Roth highlights something called the 1% rule, which I think is super helpful.
Okay, the 1% rule.
So this is a guideline for how much you should be budgeting for those like regular ongoing maintenance costs.
Okay.
It suggests setting aside 1% of your home's purchase price every year for maintenance and repairs.
So let's say I bought a house for $300,000.
Okay.
That means I should be budgeting around $3,000 per year for unexpected costs.
Yeah, exactly.
Yeah.
That might seem like a lot, but it's better to be prepared, right?
Right. It's like that saying, an ounce of prevention is worth a pound of cure.
Exactly. And Roth is a huge proponent of, embracing your inner do-it-yourselfer.
Yeah.
For those smaller repairs, why not try and tackle them yourself?
Yeah.
You'll not only save some money, but you'll learn valuable new skills.
Right. It's a win-win.
Right.
But I'm sure there are some repairs that are better left to the pros.
Of course. You know, if it involves electricity or plumbing, you probably want to call someone who really knows what they're doing.
Right. Safety first.
Exactly. But there are a lot of things you can learn to do yourself.
Yeah.
You know, patching drywall, painting, basic landscaping.
I've been watching a lot of YouTube tutorials
There
lately.
you go.
Yeah.
See, there are so many resources available online and even at your local hardware store that can walk you through things.
Yeah, for sure. Okay, so we've talked about maintenance and repairs. What about property taxes?
Ah, yes, those lovely property taxes.
Mm.
Unlike your mortgage payments, which, generally decrease over time as you pay down the principal, property taxes can fluctuate from year to year.
Yeah, and depending on where you live, they can be a big
A
expense.
very big expense.
Is there any way to kind of predict or prepare for, how much they might increase?
Well, unfortunately, there's no crystal ball for property taxes.
Right.
But Roth suggests staying informed about local tax assessments and keeping an eye out for any, proposed changes to property tax rates.
So do your research.
Knowledge is power.
Okay, so let's switch gears a bit and talk about something that's often seen as a perk of homeownership.
Yeah.
Home equity. What is it?
So home equity is basically the portion of your home that you actually own. It's the difference between what your property is worth and what you still owe on your mortgage.
Okay.
So as you pay down your mortgage, your equity grows.
Okay.
And if the value of your home goes up, well, then your equity increases even more.
So it's like this hidden asset that you're building.
Exactly.
Yeah.
And it can be really tempting to tap into that asset,
Yeah.
especially for things like home renovations or debt consolidation.
Yeah.
Ross talks about something called a home equity loan, or a HELOC,
Okay.
which lets you borrow money against the equity you've built in your home.
So you're basically using your home as collateral.
Right. And the interest rates on HELCs are usually pretty low.
Oh, that sounds like a good deal. So what's the catch?
Well, as with most things in the world of personal finance, there's no such thing as a free lunch.
Right.
So using your home as collateral for a loan definitely comes with risks.
Like what?
If you can't make the payments, you could actually lose your house.
Oh, wow. So it's not something to take lightly.
No, not at all. Even with home equity loans, responsible spending habits are crucial. Don't let those low interest rates tempt you into taking on more debt than you can comfortably handle.
So don't be house poor.
Exactly. Now, speaking of protecting your investment, let's not forget about homeowners insurance.
Oh, right. Yeah.
Roth says it's really important to have enough coverage to completely rebuild your home if something catastrophic happens, like a fire or a natural disaster.
So it's not just about covering, the current market value of your house.
Right. You need to think about how much it would actually cost to rebuild it from scratch.
And that can be a lot more than you think, right?
Yeah, especially if construction costs or material prices have gone up since you bought the house.
Well, that's true.
Roth recommends looking into what's called a guaranteed replacement cost policy.
A guaranteed replacement cost policy.
Okay, what's that?
So that type of policy will ensure that you have enough money to rebuild your home, even if the cost is higher than you expected.
Oh, that sounds like a good idea.
Yeah.
I like the sound of that.
It's all about, having a safety net.
Right.
Roth also has a really practical tip that I think is super important. Okay, what is it?
Document your belongings.
Ah.
Take photos or videos of, all your furniture, your electronics, appliances, jewelry, anything that's valuable.
Oh, that's smart. So if you ever have to file a claim, you have proof of what you owned.
Exactly. It can make the whole claims process much easier.
Yeah, that makes a lot of sense. Okay, so we talked about maintenance and repairs, the pros and cons of tapping into home equity and the importance of homeowners insurance. What else do we need to know about the hidden costs of owning a home? So it seems like we've covered a lot. Is there anything else about the costs of owning a home?
There's one more thing that Roth mentions in his book that I think is really important, and he talks about this idea of self-insurance.
Self-insurance. Okay, I haven't heard of that before. What is that?
Yeah, so it's kind of a cool idea. It's basically setting aside money regularly to cover, potential expenses yourself, instead of just relying on traditional insurance policies.
Oh, okay. So instead of paying for like an extended warranty on a new appliance, you would put that money in a savings account.
Exactly. And if the appliance breaks, well, you've got the cash to fix it. And if it doesn't break, well, hey, you've got some extra savings.
That's a good point. It's like you're taking control of your finances.
Exactly. You're making informed decisions about where your money goes.
But wouldn't that require a lot of discipline?
Yeah, you definitely need to be committed to setting aside money regularly. But the potential payoff is huge.
So how exactly does self-insurance work?
Well, think about it this way. Traditional insurance is basically you paying someone else to take on your risk.
Okay.
But with self-insurance, you're kind of becoming your own insurance company.
So you're taking on the risk yourself.
Great.
Okay, interesting. So this can be applied to more than just appliances.
Oh yeah, for sure. Think about your car insurance.
Okay.
What if you raised your deductible and took the money you saved on premiums and put it into a separate account, a car repair fund?
Well, that's smart.
Right. Then if you have like a minor fender bender, you've got the cash to cover it, and you don't have to file a claim and risk your premiums going up.
That makes a lot of sense. So if we can self-insure for appliances and car repairs, what else could we apply this to?
Well, that's exactly the question Roth wants us to think about.
Okay.
What other services or warranties could we replace with our own personal savings plan?
Hmm.
Could you set up like a home repair fund to handle, or how about a travel emergency fund?
For those, just in case moments when you're away from home.
Exactly. It's all about, thinking ahead and being prepared for those bumps in the road.
I love that idea. It really shifts your perspective on how to handle those unexpected costs.
And I think that's what this whole deep dive has really been about,
Yeah.
giving you the information and the tools to make the best financial decisions for you.
It's been a really eye-opening conversation. We've talked about the pros and cons of renting versus buying.
Mm-hmm.
We've explored all those hidden costs of home ownership.
The never-ending costs.
Right. And we even discovered this whole concept of self-insurance. Right. So no matter what, you decide whether you choose to rent or buy, the important thing is to make a choice that aligns with your values and your financial goals.
Absolutely.
All right, well, that's all the time we have for today. Thank you so much for joining us on this deep dive into the world of renting versus buying.
It's been a pleasure.
We hope you found it helpful, and we hope you'll join us again next time for another deep dive into the world of personal finance.